Well, investing in real estate is actually quite easy if you have the money. And if you don't have the money, but you're still doing your best to invest and grow your future wealth, well, you better understand the financial commitment, because any investment property that you do purchase, you want to know exactly where you stand in regards to cash flow. Because the worst situation would be if you ended up buying a property cash flowing negative when you thought you were going to cash flow positive. And if you can't afford to cash flow negative, well, you could put yourself in a really tough position. Well, in this video, I'm going to go over some realistic investments that you might actually make using real numbers from my service area of Surrey, BC. And specifically, I'm going to focus on the amount of down payment that you need to bring in each asset class of a rental that you might be looking to purchase, so you know exactly how much you have to bring to the table before you get too far down the road and possibly get heartbroken when trying to buy your first investment property. And I'm going to tell you all about that right after I ask you to please hit the subscribe button to join our 1,000 subscriber giveaway contest. When we reach 1,000 subscribers, we're going to give away a swag bag full of a bunch of cool stuff. Please make sure to hit that notification bell so you don't miss a single update from this channel. And also remember to hit the like button. My job here is to educate you about investing in real estate, and your job is to hit the like button to help get this information out to others that are also thinking about investing in real estate. And if you already knew everything that I'm telling you by the end of this video, make sure to hit the like button as well, because you are super smart. You might even already be a very savvy investor. Okay, let's get into investing in Vancouver real estate. That's what we call it, right? I'm in Surrey in the Fraser Valley, but we call it all Vancouver real estate. It was always very common pre-virus that you would have to come up with 30 to 35% down in order for a property to start breaking even and possibly even cash flow positive. Well, that all changed with the virus when interest rates were slashed in early to mid 2020, and that brought down payments substantially. With a lower payment, you could actually cash flow better, so you had to bring less down payment, and that's actually a portion of the reason why investing has come so popular, because more people can get in than could before and actually turn a profit. And I'm going to suggest this is actually a good thing, increasing rental stock, because before it was always people would come to me and say, okay, how much do I need to get into a rental? Well, the reality there is you have to avoid CMHC, and you're going to put down 20%. That's all the banks actually require if you're going to invest in a property. You have to put down 20%. But a lot of people would then save up that 20%, years and years of heartache in order to get into that investment property, and they're finally excited to get there. And then they find out when they put down that 20% that the property actually costs them money each and every month. And I have to point out that when you're putting 20% down or more, it's actually, believe it or not, more risk to the bank, because those are not now insured properties. So your interest rate on a 20% down or higher property will actually be higher than if you were buying, say, a principal residence at 5 to 10% down. And you won't see rental interest rates advertised anywhere either, because again, as soon as the bank knows that you're 20% down, they're going to increase the rates. But as soon as they know it's a rental, they're going to increase the rates again. Now, this shouldn't scare you, specifically in today's market, because rates are still at historic crazy lows. But you will definitely get a better interest rate as a 5% down first-time buyer than you will as the big rich investor that the bank will now view you as. Okay, getting into the actual information itself, I use information from rentboard.ca into determining values of what the rental income might actually be for you buying these properties within the city of Surrey itself. And the Fraser Valley Real Estate Board statistics, we're going to be using average prices for these particular type of properties so we can cross-reference them. And hopefully after doing that, you'll have a bunch more education that you can then take away with and make a better investment for yourself in the future. And of course, I'm a realtor, so I got to throw a sales pitch in. If you're looking for an investment property in my marketplace of Surrey, BC, but realistically anywhere in the lower mainland of the Fraser Valley, please reach out. We'd absolutely love to discuss it with you and show you what we can do for you in order to get you into an investment property that will make you a ton of money in the future. Okay, the Fraser Valley Real Estate Board says that the average price, and I'm going to use average here because benchmark unfortunately does not fall into 1 and 2 bedroom categories. The average price for a 1 bedroom in Surrey combined, the area that is the city of Surrey, is about $381,000. Cross-referencing that with rentboard.ca, you'll see that the average Surrey one-bedroom apartment rents for $14.49 a month. Now, in my calculation, I'm going to put about $2,000 worth of property taxes in there. I should also add in about a $300 strata fee. And if you're a landlord, you should look at least a $600 a year insurance policy to go on top of your tenant's insurance policy. Now, if I did manage to save up my 20% down and I got a 2.29% interest rate, which is maybe a little bit light these days, but it's probably still doable, that 20% down, the monthly mortgage payment or total carrying costs for this property are going to be $14.14 a month. And I have good news for you. If you're investing in a one-bedroom condo with 20% down, it looks like you will actually cash flow positive $35 a month. And let me be clear here, I actually like to cash flow as neutral to positive as possible. If you go too far positive, you're going to be paying income tax, and if you go negative, you're going to be feeding it. So I really like that break-even point of as little as $50 or less per month. Now let's move into a two-bedroom condo. The Surrey City combined average price for a two-bed condo is sitting just under $505,000. The average rent on rentboard.ca for a two-bedroom apartment is $19.71 per month. Now I'm going to increase our property taxes here up to $2,200 per year. $600 still for the insurance. I think stratas are all going to be about $600 a month because again, your tenant has to have their own policy. And let's toss in $350 a month for a strata maintenance fee. And again, you're going to save up your 20% down because that is the minimum. We're going to apply all these numbers together, and believe it or not, your carrying costs for this property are $18.13 each and every month, actually profiting you as much as $158. So even though interest rates have gone up over the last little bit, your two bedroom is actually a better investment if you can afford it, but the one bedroom is still a good option because you're still cash flowing with 20% down. But let's say you want to make an even bigger investment than that and you're looking at a 3-bedroom townhouse within the city of Surrey again. Well, that purchase price is averaging about $737, just a hair under $737,000. That property monthly should rent for $23.93 according to Rentboard, but your property tax is going to be higher. So let's set aside $2,800 for this one. Again, because it is strata, your actual insurance policy is probably not going to go up. And I'm going to keep the strata fee at $350. And the reason for keeping it at $350 is, remember, you're probably going to have more bills that your tenant's going to have to pay. They're going to have to pay not only their own hydro like they would have in the condos, but they're probably going to have a Fortis bill. So the actual maintenance fee might actually be less in the townhouse or very equivalent to the 2-bedroom condo. Now, when I apply the 20% down payment that you've saved so diligently for, your carrying costs are going to be about $25.77 a month, meaning that you're actually now cash flowing negative $184 a month. And when you do the math, you actually have to ratchet your down payment up to 27% in order for it to start breaking even, or close to it. 27% down, you are looking at a $23.78. So you're actually, believe it or not, 27% down, you're actually feeding the property $15 a month, but I would assume that's a pretty manageable number for most people. But you want to own the land and you don't like strata. This is what most people say. Well, unfortunately, most of those investors actually go out as far as Chilliwack these days because land is very expensive. For a 3 to 4 bedroom average price home within the city of Surrey, we're talking $1.23 or just over $1.23 million as your purchase price. Now, according to Rentboard, that should rent for $2,900 a month, but we're going to get into a much more expensive property tax, about $3,500 a year. And well, now we don't have structure insurance with the strata, so I'm going to set aside at least $1,250 a year for insurance. But the good news is there's no strata fee here. But when you put down 20%, your payment is actually $41.78, which is cash flowing negative by a mile. With a negative cash flow of $1,278 a month, you actually have to ratchet up your down payment to a whopping 47% in order to get that payment down to $29.01, which is then actually still negative $1 each and every month. And just for a frame of reference on that, you have to come up with $579,000 cash plus transfer taxes to get to a cash flow even spot within the average detached home within the city of Surrey. And to be clear, unless you're a savvy investor and you've owned lots of properties in the past, you're probably not in any sort of that position, which is why most people start off with a 1 or 2 bedroom condo. And in these calculations that I did here, the 2 bedroom condo is actually your best option. In my opinion, I actually prefer strata rentals, not only because of this cost issue that's going on, but the strata fee to me is worth the extra payments and not having the headaches. And as you can see by looking at these numbers, well, again, it doesn't make a lot of sense. And most people don't have the ability to put down 47% on a detached home. That's why probably most people that are looking to purchase a detached home for investment are actually going to be feeding it per month because they're looking, one, for future growth, but most people these days are buying the older homes and then looking to demolish and build newer homes in the future. And that's a whole different ball of wax because it is a lot easier to purchase an older home that you are going to either live in or rent out than it is to buy just a piece of vacant land. So there you go. Those are the cash flow realities of my marketplace of Surrey BC and the Fraser Valley for that matter. There are some other areas that if you're interested in that may actually cash flow better, reach out. We'd love to chat with you about them. And to be fair, they usually involve going further out into the valley. However, that being said, I do think we're going to see a return to the city over the next little while, so you may want to look in town as well in the condo or attached market. Hopefully this will help you inform your investment strategy moving forward. Again, if you have any questions, reach out. We would absolutely love to help you. Please remember to click and subscribe to the channel to enter our 1,000 subscriber giveaway. And remember to hit that like button if you've learned anything here today. And if you already knew it all, for sure hit the like button because you are super smart. Thanks so much, and we'll see you in a couple of days.